Fund Supermart, your online gateway to unit trusts.
What is your outlook for Singapore equity in 2016?
We are positive on Singapore equities in 2016. Let's talk a bit about 2015 first. 2015 was a bit of a challenging year for Singapore. Economic growth was quite anemic, quite slow. We think that economic growth will recover in 2016. And this is because there has been some supportive fiscal and monetary policies, as well as we believe that there will be an improvement in the economies of the developed markets. Now, you put against that the markets in 2015 as well as January of 2016 was actually quite volatile. And at this point, we think that the valuation for Singapore stocks is actually quite attractive. If you look at the price to book measure for valuation, Singapore market is actually trading lower than the bottom of the 2009 crisis, and it's actually quite close to the bottom of the 1998 Asian financial crisis. So if you put against the picture of firstly modest recovery in economic growth and attractive valuations, we find that there's reason to be positive for the Singapore market.
Which sectors or areas within Singapore equities are you most optimistic on?
Yes, we have three key investment teams for Singapore. The first key investment team is what we call the New Singapore. Now, the New Singapore are industries which represent the Singapore of the future. These are industries which are faster growth, and they may be in areas like healthcare, trade and financial intermediation, or technology. These are some of the companies which we believe will do very well in the Singapore market. The second key investment team is connectivity. 2015 and actually 2016 marks the beginning of a new era of connectivity around Singapore. There are important platforms that have just been kick-started, including the AEC as well as the TPP. Now, Singapore sits in the middle of a lot of these connectivity. And of course, our heritage is as a trading and financial intermediary hub. So I think Singapore will also play an important role. Singapore companies will also play an important role in this new era of connectivity, and these companies, I think, will do very well. Our third theme is restructuring. Now, whenever we have an environment of modest growth, companies will always look to restructure in order to realize more return and to realize more value. We already see that happening in Singapore in 2015, and I think this will continue in 2016. And some of these restructuring initiatives will result in opportunities in the stock market. So, three key themes. Number one, the New Singapore. Number two, connectivity. And number three, restructuring.
How is the economic slowdown in China affecting Singapore equities and your positioning for 2016?
Yes, China is certainly the key risk that we see. And it is not deniable that China is actually going through a period of slower growth. However, a lot of the things that we hear about in the market are not necessarily reflective of this slower growth. They are technical in nature. So things like the circuit breakers, for example, or even the level of fixing of the Chinese yuan. I think these are things which are technical in nature. They're not reflective of the economic fundamentals. Now, of course, as fundamental investors, the economic fundamentals are most important. From what we see in the high-frequency data, as well as in speaking with Chinese companies, we don't think that China is going for another leg down in terms of growth. Of course, growth is quite anemic. We think that it will take a while because China is still restructuring. But we think that the growth will be maintained at this slower level. And I think that it does not invalidate our expectation that the Singapore economy will recover modestly from here. And that already takes into account the scenario of a slower China.
Why adopt an income perspective for Singapore equity exposure, how would the risk return profile be different compared to a more general investment strategy?
Yeah, I think that adopting a dividend-focused investment strategy at this point in time is especially appropriate, because in an environment where growth is more modest, then all the more we have to rely on dividends to enhance our returns. Now, Singapore is especially suitable as a market for harvesting dividends, because number one, Singapore is a very well-developed, very mature market, a market that has already gone through development, so it is in a position to give out dividends. Number two, the amount of dividends that are given out is actually very attractive. If you look at the dividend yield, Singapore is probably the most attractive dividend yield in Asia. In our calculation, in the last 5 years, more than 2/3 of your total return from investing in Singapore would have come from dividends. So we think that dividend investing is what Singapore is good for, and I think that right now dividend investing is especially appropriate for investors.